This conference will now be recorded.
Okay, on my clock, it says 10:03. So thank you for everyone who's attending this webinar. My name is Jason Ho. Just a couple of housekeeping. Right now, we are muting everybody so that we make this as easy as possible for the presenter. Any questions that you may have, there is a chat bubble on the top right-hand corner. If you click on that chat bubble, it'll take you to our chat room.
Hi, so Jason is having a little bit of a computer issue. He'll be back in a second, but I just want to take this opportunity to introduce Jeff Moore, National Sales Director for American National Insurance. He's going to be sharing a little bit about the GUL with you today and some other exciting things for the year-end push. And Jeff, I'll let you take that away.
Okay, thank you, Chris. All right, there we go. Good morning, everyone. Thanks for bearing with us. Again, my name is Jeff Moore. I'm with American National. You can see there on the screen, the company has been around for quite a while. Myself, I've been in the industry. This is my 33rd year in the industry, my 18th year with American National, and they truly are, as the tagline says, the company that offers it all. We hit 120 billion of life insurance in force towards the end of last year. Quite a feat, but we couldn't do it without producers such as yourself. So thank you for your business, future business, and your support shown by being here today. Now, a little financial scorecard on the company. We've been around since 1905, so 115 years and going strong. We carry top ratings with all the agencies, but the one that I really want to point out and make emphasis to is AM Best. They're the oldest and probably one of the largest insurance industry rating services. And we're one of 3 carriers in the entire industry that have maintained an A or higher rating, that's top echelon ratings, every year consecutively going back to 1941. That's 79 years. There's only 2 other companies with a record that matches that. And then you can see with the other industry rating services, Standard & Poor, Weiss, top ratings with them. And our financial strength, we have no debt, no publicly traded debt whatsoever. So when you look at our cash surplus, it's over 20% of our actual asset base. That's 6 billion plus of surplus reserves. Ideal for a situation like what we're in today, and excuse me, and what we faced in over our 115 years. Now, what are we going to cover today? Of course, it all starts with the underwriting. ANICO has widened our express lane. I'm talking about wider lanes today, aren't we, to keep our social distancing. So we've done the same thing. Our focus product is going to be GUL, Guaranteed Universal Life. We'll talk about how to do business with American National, kind of show you some of the tools that are available to you. And if time permits, we'll talk about some contests or incentives. If we don't get to those, I'm sure Jason, Chris, Vince, they'll share those with you when they're out and about and doing one-on-one. And then, of course, we'll end with the strong sales support that you've got on the ANICO side. Let's start with the express lane. We have what we call accelerated underwriting with American National. And we started this back in 2010. We have two phases of it. We have Express Underwriting and Express Plus. And depending on the program, we get anywhere from 40 to 80% approval non-med. That means no exam, no blood, no labs, possibly up to 1 million in face amount. That means approvals not in weeks, but in days. Let's take a look at Express Underwriting. Offered up to age 65, just under $250,000. Best class is standard. We accept either paper or electronic app. We call it Expert App at ANICO. And in this program, 80% of the cases going through are non-med approval. That means no exam, no APS, no phone inspection, nothing. Just the application, the approval. Now for Express Plus, this is where we can get into the higher face amounts, ages 18 to 50, 250,000 all the way up to $1 million. Or if they're 51 to 60, we can go up as high as $500,000. And all rate classes are available. Last year, over 60% of our Express Plus approvals were approved in one of our 3 preferred classes. It's pretty impressive. Nearly 2/3 of your Express Plus non-med business approved preferred. Now this is the app or expert app only, but as a company, and you're probably doing majority of your business electronically as well, I think as a company, we're doing about 80% of our business today for life business electronically. Now here, because of the higher face amount limits, we don't quite get as much approval on the non-med side, but compared to what we see in the industry, we're about double the industry average. Depending on the age, we range from 30 to 40%. All right. Now, beyond the express underwriting, ANICO has in these, we'll say, challenging times, we've created our own action plan for COVID-19 in terms of underwriting. And that basically deals with taking our Express and Express Plus programs and expanding them so that we get up to 50% more non-med approvals. And this basically has been extended month by month. We started it back in March, but we say February, I'm sorry, we say September, but go ahead, Jason. It's now indefinitely. Since we don't know when they're going to call the game, so to speak, on the pandemic, we're just going to keep our program going forward. And that basically means that up to 50% more approvals non-med, cases that ordinarily would require medical underwriting and might have a slight rating, we're going to just basically go ahead and put those through whenever possible, not in every case, but non-medically, put those through, and it may result in a slightly lower rating than what they could get if they did a medical underwriting. Go ahead, Jason. Now this will be, for the expansion, this will be through age 50 up to $1 million, any new or pending business, and they don't have to take the offer. Unlike a lot of carriers, they don't have to take the offer. If an exam or APS can be obtained now or at a later date, we'll reconsider or re-underwrite to see if a better class is warranted. Go ahead. To date, and this is through July, up through $250,000, up to $250,000, we had 82% of our business approved non-medically with no exam, no APS. Up to $1 million, we had 56% approved with no exam, no APS. Pretty impressive stats, much better than what we're seeing out there with a lot of companies. Again, this is indefinitely. We're going to continue this. Now, how do we compare with how other companies are doing it? Well, again, the first thing I indicated, we will allow exams if they can obtain an exam or if they can obtain medical records. We'll look at those and offer better than what our COVID-19 guidelines would otherwise suggest. We utilize things such as Lab Picture, which is an online service. And if need be, we may utilize telephone interview, especially with frontline healthcare workers. We may do that in conjunction with a COVID-19 questionnaire. But the key here is if it's issued with a rating, we will allow them to complete an exam and be reevaluated at any time. With most other carriers, they're saying, no, we're going to give you this lower rate and you can come back in a year and be reconsidered. ANICO, not the case. And on older ages, we've kind of got a niche there. We'll take people all the way up to age 79 if they're not worse than a table 4. Most companies today are cutting it off at 70 or 75. They're postponing anybody that's 70 or 75, regardless of underwriting. They're just postponing them. I know AIG is, I know Pru is, so ANICO is much more liberal when it comes to that. Okay, go ahead. Okay, let's take a look now at the feature product signature guarantee. Okay, go ahead. Guaranteed death benefit, cash out rider, and living benefits. That's a formula for a very competitive product. And as you're going to see, not just competitive in features, but also price. Go ahead. It's basically a dial up your guarantee, anywhere from 95 to 121. Pay a level premium or short pay it for a limited period of time, like life paid up at 65, and then determine the face amount, permanent protection for as long as you need it. Okay. Issued to age 80, 25,000 minimum face amount. Again, it's dial up your guarantee, 95 to 121. And we offer a double grace period. Basically, 31 days is what you see with most companies. ANICO extends it. We give you 2 months for contractual catch up if they miss a premium. And we've had some of those situations, with what we're facing today. 61-day grace. All 3 living benefits. In New York, we do not have critical. Okay, in New York, we do not have critical, but all other states, pretty much critical, chronic, and terminal illness. The flexibility of limited or short pays, very competitive. Again, in New York, one other exception, New York does not permit short pay or limited pay. So you have to do a continuous or level pay for the death benefit guarantee period. So if you're doing a death benefit guarantee to 105, you've got to show a premium pay to 105. The guaranteed cash out rider that we're going to spend a little bit of time on here on the next slide, pay particular attention to how powerful that is, much more competitive than what you see in the industry. And I'll make note that we even offer it on the 15-year cash out if it's a rated case. And with most companies, rated cases, you'll lose the cash out option if they offer one right up front. Go ahead. Okay, how does it work? Well, the cash out is going to be offered in either the 15, 20, or 25th year anniversary, and it's going to be either a percentage of the premiums paid, not to exceed a percentage of the death benefit. And I'll illustrate that better on the next slide. Okay, on the smaller policies on the left there, we'll call that express because that's up to 250,000. 15th year, they get half their money back. 20th or 25th year, they get all their money back, provided that the return of premium doesn't exceed 45% of the death benefit. Now, in the larger policies, those over 250,000, there it's a 65% or 2/3 return of their premium in the 15th year, or a full return in the 20th or 25th year. And again, that's provided that it doesn't exceed the aggregate cap, which is 65%. Now with the industry, typically it's anywhere from 30 to 40% on their cap. ANICO's got the largest cap on a cash out benefit, which means that just about most of your clients that cash out a policy in the 20th or 25th year, they're going to get a full return of their premium, unlike other carriers. Next. Now this example kind of shows you how we calculate it, but fortunately the software will do it for you. If we take John, 65, he's issued in our first tier of preferred, standard plus, on a guaranteed death benefit to 105, death benefit of 500,000. So if you'll go immediately to the far right column, that aggregate cap is calculated by 65% of the $500,000 death benefit. So that means the most that he'll get in any of the cash out anniversaries is 325,000. So if we look at year 15, cumulatively, he's paid in just under 203,000 of premium. If he did a cash out, 65% of those premiums paid would be 131,943. He'd get that back. In year 20, he's paid in over 270,000. He'd get the full amount back because he's still underneath that aggregate max. In year 25, he's just slightly over that aggregate cap with the 338,000 that he's paid, but he's still going to get about 96% return of premium. This is the one where with most carriers, 25th year, the client's getting about 50 or 60% return of premium because they're capping out. With ANICO, they're getting anywhere from 90 to 100% still because our cap is so much higher. Now, the next slide will show you that the software will calculate this for you automatically. This is on the signature page of the illustration, so it's placed perfectly. The client signs it, and it's telling the client contractual guarantee. You pay these premiums, and in each of these policy anniversaries, 15th, 20th, or 25th year, if you choose, you can cash out your policy, and this is the amount of money you'll receive back versus what you paid in. As you can see, the example we just went through, it's going to be just about 96 to 100% return of premium 25th year, 65% return of premium in the 15th year. Okay, next slide. So how do we stack up price-wise? Well, on a continuous pay premium, whether it's in New York or out of New York, we're top of the charts with the leading writers of GUL. In the states where you can do a short pay, pretty much all states outside of New York, we're also top of the charts. Okay, next slide. Now, how does that look on a case-by-case basis? Well, let's look at some ages, 30 to 50. And in the left-hand column, I'm showing you what the monthly premium would be on a $100,000 death benefit guaranteed to 121. That's what it would be if they just did a continuous pay. If you pay attention to age 40, if they want to pay up that policy in 25 years, it costs them just an extra $22 a month to do so. So for about the cost of running to Starbucks a few times, which many of us aren't doing today, they could pay up a policy, 22 bucks a month. Next slide. How about flexibility? Now, this is something that's kind of creative. We built our product to allow for it. A lot of companies, you can't do this. How about a GUL that if the client starts out, they're paying continuous pay premium, they got a death benefit that they want today, down the road, they want to stop paying premium. They're going to retire, their cash flows, not what it was. Regardless, if it's any time after the 10-year surrender period, the client can go to ANICO and request that we calculate a reduced death benefit where no further premiums are needed. Let me give you an example. Next slide. Okay, this shows you that table we just pulled from, that $100,000 death benefit guaranteed to 121, and it shows you the monthly premium. But on the far right column, if that individual at age 65 went to ANICO and said, I don't want to pay any more premium, what's my death benefit got to drop to if I don't want to pay any more premium? Basically, what will a reduced paid up policy be for me at this point? And this just shows you the strength and the pricing of ANICO's product and the flexibility. A 40-year-old that we just looked at could say, oh, I can keep about 75% of my original death benefit and I don't have to pay any more premium. With most companies, dropping the face amount at any point can cause problems with that no lapse guarantee. With ANICO, our product is built for that. So it just shows you the flexibility and the competitiveness of ANICO's product. Okay, next slide. Now, in July, the GUL marketplace underwent some significant repricing. ANICO is at the top of this chart. There you go. And as you can see, compared to many of the competitors out there, AIG, Lincoln, North American, they're looking at anywhere from 10 to 20% increases on their products. ANICO, 3 to 5%. And as far as Mutual of Omaha and Prudential goes, they pulled out altogether. So we are in this market. Make no mistake, ANICO's in it to stay, and we're all in. And we're one of the more competitive products continuing after this price change in July. Okay, next slide.
If you don't mind me cutting in.
Go ahead.
This is probably one of the most important slides for me because I've been in the industry now for about 10 years. And GUL has been a great part of my success. And the reason why that is it's probably the best product available for really legacy planners. For the clients whose main concern is really about leaving legacy to their family. There's really no product out there better than the GUL. While the GUL is fantastic for clients, it's really difficult for carriers to kind of keep it on the shelf. If you look back a number of years, there's a lot more companies out there who had a GUL. But as time goes on, as you see, either they're discontinuing the product or they're basically pricing the product out so that most clients won't even consider it. So that's why if you've seen the flyer and the reason you're here is because of it, that's where the fire sale is. We don't know what it will look like years from now. So right now, while some carriers like ANICO, who's great, and they're not really raising their premiums that much now, we don't really know what could happen in the future. So as you see, numbers don't lie. This product is really slowly phasing out. And today is probably the best time for you to sit down with your clients and really discuss if this is a good fit. The one thing I will kind of add, this is kind of how I've built a lot of my career, was doing a lot of policy reviews where all you're essentially doing is looking at for the old whole life policy or old VUL policy and having the discussion of, so you bought this policy 10, 15, 20 years ago, what are your priorities now? What if we could 1035 the old whole life, the old VUL into the GUL, where either the premiums will be completely gone or the premium you're paying will significantly go down. And this gives the client the ability to use a cash value that may not be as important as it is today, but keep their death benefit for their family. So it's a very good strategy that a lot of people have done, especially in the multicultural market. I'm sorry, Jeff, didn't mean to cut you off.
Oh, no problem. So after the repricing, after all the smoke cleared, as Jason just pointed out, ANICO still ranks as one of the best GULs in the marketplace, regardless of age. And at the older ages, actually, that was some of the smallest increases that we took. So we make no mistake, we want this market. We've been in it before. We pulled back, as Jason indicated, a lot of companies pulled back. We were in it very strong in 2006, 2007, through 2009, actually. And then we pulled out, we paused, we evaluated the market, and then we came back in with a newly priced product, put on that guaranteed cash out rider. That's something that's new in the last few years. And now we're in it to stay. So as you can see, the pricing basically confirms that. Okay, next slide. So if we kind of look at ANICO's Guarantee UL and, top 5 reasons what's not to like about ANICO's GUL. Well, first off, lowest premium to age 100 over half of the time, and in the top 3 carriers, nearly 90% of the time. So you're almost always, even if you don't do the spreadsheeting, you can just know walking in that 90% of the time you're going to have the best product there just on price, not alone based on the living benefits, the cash out, the flexibility, all those things in addition to that. And that brings us to point number 2, flexible guaranteed death benefit. You can select a guarantee anywhere from 95 to 121, and you can pay a continuous or short pay premium. Return of premium flexibility. You got a guaranteed cash out with 3 anniversary dates. A lot of companies that offer them, they only offer it on the 20th and 25th year. They don't even offer a 15-year. Now, there's no additional cost. If the client is age 70 or younger at issue and they're not rated over table 4, they're going to have the cash out rider. Living benefits, up to $2 million of living benefits, critical, chronic, and terminal illness. Accelerated underwriting, as we talked about, we started off this morning, potentially non-med as high as $1 million face amount. Okay, next slide. So how do we rank then compared to other companies? After the repricing, we're still the low-cost leader. As you saw on the previous slides, many companies increased and significantly more than ANICO, or they just pulled out altogether. 3 guaranteed cash out options, offering the highest return because we have the highest aggregate on a guaranteed cash out. A lot of companies that offer the cash out only offer 2 options and much lower aggregate. All 3 living benefits, the flexibility on how to pay the premiums. And one point I didn't make, but this is important to you, should be higher targets. It's notorious for companies in the GUL market, always has been, that they cut corners on your commissions to price their product competitively. That means they have low targets to be more competitive on the pricing. That increases their spread. Well, ANICO has some of the highest targets, and we have a 2-year rolling target. So that means that even if you don't hit target in the first 12 months on the no lapse guaranteed premium, and in many cases you won't because it's that low, you won't hit target, but you will hit target 14, 15 months into the policy, you'll just continue to receive first year commissions into the second year. With most carriers, they're not going to pay you near what ANICO is. Okay, next slide. Living benefits. This is where the rubber meets the road in terms of living benefits. ANICO has 16 critical illness triggers, 16. Now, granted, the critical illness is not available in New York or Connecticut. That's the other state, but it is in all other states. Okay, all those other states. That's 16 critical illness triggers or qualifying events. With most companies that offer critical illness, they offer anywhere from 6 to 8. So significant strength with ANICO. We offer partial or full settlements. If they're doing partial settlements, they can have multiple claims even in the same year. We include living benefits on rated cases up through a table 4 or a flat extra of $5 per thousand. No limitations other than California. And lump sum benefits if they choose on any of the living benefits. And just in the last 3 years alone, we've paid out nearly 200 claims and over 20 million. That's a key number. We don't just promise it, we actually pay it. Next slide. There's the 16 critical illness triggers, kind of give you an idea of what qualifying events we offer. Most companies, as I said, they offer maybe the top 6 on this list, but ANICO goes much deeper into it. The ones in red are not available in California, so that's California restrictions. But key feature here is 16 compared to most companies, if they offer critical illness, 6, maybe 8. Okay, next slide. And then there's chronic and terminal illness. Chronic illness there on the left. Chronic illness, and actually I've got a mistypo there. Chronic illness is available in New York. It's just not available in Connecticut, so I need to fix that. Here's pretty much typical in the industry: inability to perform 2 or more of the 6 daily living activities, or if they're severely cognitively impaired, which dementia, something along those lines, Alzheimer's. Anything that's a cognitive impairment is going to be an immediate qualifying event. Lump sum payment. A lot of companies make a guarantee on their long-term care acceleration payment, but it's a small percentage of the death benefit, and that's the most you're going to get regardless of how severely impaired you are. ANICO, because we're doing it on an impaired risk analysis, we'll do lump sum payment and we'll fully accelerate the amount of the claim. 90-day waiting period. We don't apply the 2-year contestability period on chronic illness claims like most carriers. It's available at least 50,000 face amount or better. It is not available on term in California. That's the other restriction. Terminal illness, in most states, if their life expectancy of 2 years or less, they're going to have a terminal illness claim that's going to be in the 80 to 90 percentile on the acceleration. 12 months for Connecticut and Florida. Here, there's no restriction. It's available on all classes, regardless of ratings, and policies of 25,000 or higher face amount. And there's no state restrictions. It's available in every state. Okay, next slide. Here's how it works. We take the eligible death benefit, and then the major factor that determines the benefit that will accelerate is how badly impaired is their life expectancy. In other words, the more severe the illness or the injury and the effect on their life expectancy, the higher a percentage of the death benefit we will accelerate. So we're basically doing impaired risk underwriting. They'll complete a one-page application, which is basically the request for the benefit, and then we will send out APS requests for any doctors that they've seen for the condition, and we'll basically do a deep dive and get everything we can, because the more we dig up, the higher that percentage acceleration. And minus any policy debt, which really isn't relevant. You can't borrow from a policy that doesn't accumulate cash, the GUL. You're going to have your accelerated death benefit. They can do partials, and if they do a partial, then whatever the premium was for the no lapse guarantee, the remaining death benefit will just adjust it down by that amount. Okay, next slide. In our brochure, it's a client brochure. We've got some excellent case examples of actual claims. Obviously, we changed the pictures and the names of the individuals, but the claim actually is a real claim. We've got 4 actual claims in there. So if your client wants to see how do these benefits work, give me some context. ANICO's got some great context. So next slide. For support,
Excuse
sales.
me, I cannot see the slide. Can someone put the slides back?
It might be an IT issue, which I have to troubleshoot with you after the call, unfortunately, James.
Okay. For sales support, of course, you're going to have the team there at Strength Insurance Brokerage. But as ANICO sales support, you've got 2 avenues. You've got myself, Jeff Moore, sales manager, ANICO, my contact information, and then on the right, our field support center. That's my internal wholesaler data line of defense, I guess you'd say. You've got a direct line into them and email. They are the only department in the company that does not have voicemail. So you will always get a live person. You may have to wait a minute if they're at a peak time, but they are staffed by about a dozen different individuals. You're always going to get somebody, and they can help you with anything from general product questions, forms, how to order supplies, maybe a quick status check on a case, how to run the software, how to download the Expert Office, how to log on to the website. Pretty much anything you need, they're an excellent resource. For case design questions, that's where you're going to go to either myself there on the left or someone like Jason or Chris at Strength Insurance Brokerage. Okay, I'm going to flip it back over to Jason.
Thank you. I really appreciate it, Jeff. So I did see a question from James, and I did hear you earlier about not seeing the screen. So whether you were on your phone or there's some kind of issue, I will be sharing this presentation to you guys within the next 24 hours. So if there was some reason, well, especially since I think the first 10 minutes we didn't have all the slides, you'll have it in your hand. I do want to promote our next webinar, which is on September 17th. It will be at 10 a.m. and we will be highlighting premium financing, a topic that while it sounds difficult, there's definitely a way to kind of help you walk you through it so you know how to approach the client that may fit this. With that said, I'm just going to put up my contact information. So again, my name is Jason Ho. My number is 347-635-0340. My email address is jason@strengthib.com. As I said, I will be reaching out to you guys in the next 24 hours. Though I understand with COVID, things are relatively constricted to what we can do. It is my initiative now in the last quarter of the year to start going out. Obviously, I would do it in a safe way. So I will be wearing a mask, have sanitizers, we'll keep the 6 feet distance. But I would absolutely love the chance to sit down with each and every one of you in person. So hopefully when I call you, we can set up a meeting and we can talk more then. I saw that there hasn't been any questions, but of course, you have my number on the screen. So if there's any question about what you heard today, or you want to learn a little more about strength and who we are, feel free to give me a call. With that, guys, have a great day. Thank you for attending, and I'll see you at the next one.
Thank you, Jeff.
Thank you.